Hello, my name is Alexis Assadi. I'm a Canadian private mortgage lender, and I've been lending on mortgages throughout the country since 2013. This video is about the 101s of Canadian private mortgage lending and what you need to know before you start lending your own money in Canada. Every year, thousands of Canadians are turned down for mortgage financing by banks. Maybe their income is difficult to verify. They could be self-employed, facing credit challenges, or under pressure to close quickly. Whatever the reason, their need for financing doesn't go away. Many of these borrowers turn to private mortgage lenders. Let me introduce myself before I continue. My name is Alexis Assadi. I'm the founder and director of Assadi Private Capital, a Canadian private lending firm. I've been a direct private lender since 2013, funding mortgages, personal loans, and business loans across the country. My company provides alternative financing when banks are unable to. My approach emphasizes both borrower protection and deal viability. Private lending has become an essential part of Canada's financial system. It provides solutions where banks cannot, and it has created opportunities for investors, brokers, and professionals who understand how it works. This video is designed for two groups. First, aspiring private lenders and investors who want to understand how this market works before putting their capital at risk. Second, industry professionals like mortgage brokers, lawyers, real estate professionals, and financial advisors who want a deeper understanding of private lending so they can better serve their clients. If you fall into one of those groups, this video will give you a structured foundation in Canadian private mortgage lending. So with that, let's ask, why does private lending exist in the first place? Canada has one of the world's most stable and regulated banking systems. Our chartered banks and credit unions dominate the mortgage market, but they operate under strict lending criteria. They must follow federal regulations, risk-weighting rules, and rigid internal policies. Financially responsible borrowers who don't fit neatly in the box are often excluded from institutional capital. For example, a self-employed person may have a strong income but irregular documentation. This can make it difficult to satisfy bank underwriting. A borrower with past credit issues might be able to afford payments today, but not meet the bank's credit threshold. Or a property investor might need to close quickly, while bank approvals can take weeks. Private lending exists to fill these gaps. It provides short-term, asset-based solutions where banks can't act quickly or flexibly. For borrowers, it offers access to financing when conventional doors are closed. For lenders, it creates an opportunity to step into a role that is both essential to the market and potentially rewarding, provided, however, that it is approached with knowledge and care. So who are the main participants in this market? First are the borrowers. These are individuals or businesses who don't qualify for traditional financing. They may be purchasing property, refinancing, consolidating debt, or accessing capital for commercial purposes. Next are the private lenders. These can be individuals lending their own money, mortgage investment corporations, or pooled funds. They extend credit primarily based on the value of the underlying asset. The borrower's credit or income are usually less important. Private mortgages are usually arranged through mortgage brokers. They are intermediaries that match borrowers with lenders. They also help ensure that deals comply with provincial regulations. Mortgage brokers are central to this industry. Finally, there are professionals like lawyers, appraisers, and insurance agents. Lawyers document the transaction, register the mortgage on title, and assist with due diligence. They also protect the borrower's rights. Appraisers estimate the property's value. Insurance specialists help protect the lender's collateral. Together, these participants form the ecosystem of private lending in Canada. So let's look at what attracts people to this market, and let's consider the risks that they should be aware of. For lenders and investors, the most obvious opportunity is higher returns and monthly interest payments. Private mortgages typically carry interest rates that are significantly above those offered by traditional banks. This can create monthly cash flow. Additionally, these loans are secured against real estate. Just like a bank's, a private mortgage is registered on title to the borrower's property. If they fail to pay, the lender has a legal claim to the asset and can enforce the mortgage through remedies like a power of sale or foreclosure. There is also the appeal of helping borrowers who are underserved by traditional institutions. Many lenders take satisfaction in funding a deal that keeps a family in their home or enables a business owner to move forward. It is one of the few vehicles for retail investors to make a direct impact on people's lives. But these opportunities come with risks. The most significant is default, where borrowers fail to make their loan payments. Even when security is taken, enforcing a mortgage can be costly and time-consuming. Another risk is liquidity. Unlike a stock or ETF, one cannot just log into their brokerage account and click sell to get their money back. A private lender should be prepared to hold their investment to term. There is also regulatory and compliance risk. Lenders must ensure that their transactions comply with provincial mortgage brokering rules, federal anti-money laundering requirements, and consumer protection laws. In sum, private lending can offer strong returns and the comfort of real estate security, but it is not without danger. Successful lenders are those who balance opportunity with rigorous due diligence, proper structuring, and a clear understanding of enforcement. While private lending is a growing industry in Canada, there are still several misconceptions. First, many believe private lenders are unregulated or operate outside the law. In reality, private mortgages are governed by provincial and federal rules. Sometimes licensing is required. Transactions must also comply with disclosure, consumer protection, and anti-money laundering requirements. Another misconception is that private lending is predatory or loan sharking. That is not the case. While interest rates are higher than bank rates, they reflect the higher risk profile of the borrower. The terms are documented legally, the mortgage is registered on title, and both lender and borrower have defined rights and remedies under Canadian law. Finally, some assume private lending is a shortcut to easy money, but in truth it requires careful due diligence, proper structuring, and an understanding of enforcement. Done responsibly, it is a professional activity that fills an important role in the financial system. We've now covered the fundamentals: why private lending exists in Canada, who the key participants are, the opportunities and risks, and some of the common misconceptions. But this is just an introduction. Private lending is complex. A full understanding requires knowledge of loan-to-value ratios, due diligence methods, deal structuring, compliance obligations, book of business management, and enforcement remedies. Each of these can make the difference between a successful transaction and a costly mistake. If you'd like to go deeper, you can access a 10-module online training program called the Canadian Private Lending Course. It's designed to give aspiring private lenders and industry professionals a structured, practical education in this field. The first module is free, and if you find the content useful, you can upgrade to study modules 2 through 10. It's necessary to note that much of the information online and from artificial intelligence applies to the US market. But the American private lending industry is vastly different from ours, and it varies across state lines. AI often infuses American concepts with Canada's mortgage industry, producing incomplete or incorrect material. The Canadian Private Lending course is 100% focused on Canadian rules, theories, and methods. Crucially, it is built on my practical experience as a private lender since 2013. To get started with your free module and to ensure your strategy is Canadian compliant, click the link in the description or on the screen now. Thank you for watching.